And you're here to talk about Apple. We're delighted that you're here because, as we've seen over the past several days, Apple stock has been taking a beating. You've got a $175 price target still, if I'm not mistaken, on Apple. Although you've brought it down, what gives you confidence that Apple can deliver? Because a lot of people are losing that confidence in the stock.
I mean, it's a white-knuckle period ever since the earnings a few weeks ago with the iPhone number that was massively strong but didn't beat Whisper expectations.
The June quarter.
Yeah, in terms of the June quarter, I view this as a 3-month sort of battleground period, but ultimately I believe right now 30% of iPhone users have upgraded to 6. We think that goes to 75, 80% next year. You get the 6S coming in the fall. I do believe this is going to be what I view as just a massive opportunity to own Apple. You're going to see, just like today, a lot of peers yelling fire in a crowd theater, technicals breaking. At the end, you take a step back, 8 times X cash for a company that I ultimately believe Street's underestimating growth the next year and a half by 15, 20%.
Well, how closely do you follow this stuff?
I have my iPhone, right? I pulled out my iPhone.
You're a credit guy. How much of this matters to you?
It doesn't really matter except for sentiment. I mean, Apple is a premier credit.
The bellwether, right? Which
is, oh my God, they borrow so cheaply. What I will say, though, about Apple, which I think really resonated with me, and by the way, I saw Bob Iger at CEO Magazine's dinner last week, and I love his articulated plan for the future. The stock's down 10, but this guy's brilliant. I think he could turn it. But I think it relates a little bit to Apple, where the CEO is as innovative as the former CEO, and can Apple manage that massive innovation that they have for the past decade in the future? I've really come to respect great CEOs.
Sure,
like
and
Bob
Cook, and that's been sort of proved me, right, in terms of what Cook's done. And I think now we go into that 2.0 period. I mean, he's proven it with iPhone 6. We've seen it with the stock. Now it's really about 6S and these new product areas in terms of streaming TV potentially. The Apple Watch has also come out softer than expected, which has been a headwind.
So, Dan, do you think that Apple is this period, the white-knuckle ride, as you describe it, is going to mirror what Apple investors went through back in 2013 when the stock started the year out in 80, bottomed mid-year, more or less where we are now, below 60, and then was back up to 80 by the end of the year. And now, of course, and I'm talking on a split-adjusted basis, it's now at $114.
I view it as a similar trend. And also, you could see the company also from accelerated buybacks, using some of that $200 billion more in terms during this period. We've seen in the past when a stock has a free fall with Apple that they've been able to take advantage. But what now started happening, even coming here, the cab driver was talking negative about Apple. So that could be potentially a sign that we've sort of hit bottom. But it does, just like you said, it becomes more, it's a consumer, it's a retail name. This is really the golden sort of standard for technology. Yes. I view this as more of a correction, and they prove it in September and December going to 6S rather than the start of, I find it embarrassing when someone compared to Nokia 2.0. As some investors.
Do you think they should have returned a whole bunch of capital and borrowed a lot of preferred?
Can we just take a minute? Look at Len just falling right into the TV anchor mode right there. You know what? Let me just ask you a question right here.
I love it.
I mean, Einhorn proposed it, right,
sure,
in his letter to Apple as a major shareholder, that they recap it out and they really could get better ROEs for their shareholders if they change their capital structure.
Well, and that's been, look, the $200 billion they announced, I think, was just the starter. Now they do face serious questions because as much as China is growth, and that's really fueling the engine for Apple, now it does really be, do they change some of that policy? Do they do an accelerated buyback? What do we see on the cash strategy, increased acquisitions?
Why are tech companies so afraid of capital efficiency?
Okay. Well, some of it has to do with the fact that a lot of their cash is trapped offshores and they haven't paid taxes, which we can talk about fairness and taxation maybe another time. But as that repatriates, right, or they can borrow against it to pay dividends, they can make a more efficient capital structure, which I know our government has to fix. I know Orrin Hatch is working on that, for example. So that's a whole other topic, and I'm concerned about corporate tax rates and things like that. But Apple's probably in one of those quagmires, right?
Yeah, with the vast majority, it's offshore, and that's why I think right now they're going through a period trying to figure out what the next step is after that $200 billion. But I do believe next few weeks an accelerated buyback could sort of kick in, and you're going to see more throw in the towel. You're going to see investors saying this could go to 105, 110. This is the end of the Apple growth story. It's the third inning. Remember, 30% of upgrade to iPhone 6.
How about the fact that Apple makes money hand over fist? We talk all the time about these incredible growth stories of companies who make absolutely no dough.
And it trades at 8 times X cash. and China is 7% penetrated.